Good morning, traders. This is Joanne with Succeed in Forex. Welcome to our Forex market news broadcast for Thursday, February the 21st, 2008. The headlines out of Switzerland this morning are reading, "The Fed is still seen as cutting rates again to support economy." The dollar rose on Wednesday, but gains were constrained amid indications that the Federal Reserve would likely continue cutting interest rates to heal an ailing economy even as inflation pressures mount. The minutes of the Federal Open Market Committee's January 29th and 30th policy meeting showed most officials saw risk to growth as weighted on the downside. The Fed also lowered its 2008 growth forecast to between 1.3% and 2% from a forecast of between 1.8% and 2.5% in November. News that the underlying inflation accelerated at a faster than forecast pace in January had earlier cooled expectations of steep rate cuts by the Fed, sending the euro-dollar to a session low of 146.15. The Fed has lowered its benchmark overnight lending rates by 225 basis points to 3% since mid-September. The Fed's funds futures show a 90% chance of a 50 basis point easing next month, and a 25 basis point reduction has been fully priced in. Yesterday, the euro-dollar was down 4% at 147.22. It slipped down earlier to 146.15 after a top German politician said the country's regional state-backed Landsbank was in crisis. Data showed the U.S. core CPI rose 3% in January, the strongest monthly rise since June 2006. St. Louis Federal Reserve President William Poole commented that underlying inflation trends are closely watched by the Feds in setting interest rates. While the rise in January consumer prices was not welcome, the figures were no cause for alarm. The dollar-yen last traded unchanged at 108.04 off intraday highs of 108.37. This was boosted by a rise in U.S. stocks. The dollar-Swissy gained 38% to 109.85, while the pound-dollar dropped to a one-month low at 193.63. The cable last traded at 194.21, down 3% from late on Tuesday. Oil surged to above $100 per barrel, making a record high for the second straight day. This pushed the loonie to a session low of 101.06. It last traded down 29% at 101.26. Investors will be watching the weekly jobless claims data today for fresh clues on the health of the labor market. The Fed has forecast the unemployment rate at between 5.2 and 5.3% this year. The jobless rate is currently at 4.9%. In the Asian session, the dollar suffered against a basket of majors. As expected, the dollar fell against the basket of major currencies, namely the euro and the yen. The greenback was trading at 107.77 yen, down from 108.18 yen. The euro traded at 147.33, up from 146.59. The Reserve Bank of Australia's statement highlighted the dollar's yield disadvantage. Also, the RBA's minutes revealed that it was not discounting a rise in rates to combat inflation. This statement comes on the heels of anticipations in further rate cuts from the Fed, as it will seek to fend off recessionary despondency in the economy. All this had the effect of inciting investors to sell the dollar as they sought higher-yielding currencies. In the Asian session, most of the currencies performed better in the wake of a probable rate hike to be announced by the Chinese authorities. China's inflation rate rose to an 11-year high, and this has fueled speculations that the Chinese central bank will raise rates. Since most of the major Asian currencies moved together as a bloc, the yen also benefited from this speculation. During the European session, the dollar gained some strength, but the euro stalls. The higher inflation readings will in all probability attract the attention of the Federal Reserve, which has been cutting interest rates aggressively to stave off a recession. The central bank has said that it expects a slowing economy to keep inflation pressures in check. The dollar picked up some steam as a result of this and was helped by a stall in the euro's rise. The euro was checked by a statement from the governor of the North Rhine-Westphalia that the German state banks were facing difficulties. These difficulties reflect a global weakening in the financial sector across Europe, which is having a negative effect on the euro. These troubled banks can be synonymous of an overall difficulty in obtaining loans, which could have a deteriorating effect on the euro, since this would mean a de facto contraction of monetary policy without an accompanying hike in interest rates. This concludes our news for today. We would like to thank you for viewing, and we hope you have a great trading day. Before we sign off, we would like to invite you to visit our website at www.succeedinforex.com. There you can find a link to our Yahoo forum, which is also called Succeed in Forex, and some additional information about our Traders Training Center. We look forward to having you join us tomorrow. Have a great day and happy pipping.